So, after several weeks where we had no significant data to really digest and the market was more driven by perception, we are headed into this week and we are chock full of data that we need to pay attention to. And here are my top three things that we need to be focused on. What's going on, y'all? My name is Kevin Weedmark, aka the Mortgage Mouth, coming to you with another episode of the week ahead. As always, please do not hesitate to hit that subscription button so you never miss a beat and you know exactly how to guide your clients, or if you are the consumer yourself, how you should be looking at when to make a move in the marketplace. So, my number one thing that we're going to be focused on this week is going to be jobs. And that is the big focus right now of the Fed, other than inflation, which we're going to get to, which is the number one focus. But why jobs is so important this week is because we have a plethora of information coming at us with the likes of information from, you have the JOLTS report, you have ADP. We have so much jobs information coming to us this week that we need to be really focused on it, because should the labor market come in above forecast once again, to me, that's going to make some significant headlines, because it's going to solidify that the labor market appears to be on steady ground. And if we look at what happened last month, right, we saw non-farm payrolls come in at 147,000. That was well above forecast. We saw state governments really picking up, as well as healthcare. And the big concern where we had the federal government pulling back, that didn't seem to make a significant difference as state governments and healthcare really picked that up. We also saw unemployment remain at 4.1%. So, in my opinion, what I think is going to happen is we are going to see um, it come in once again above forecast. If I look at where the anticipated number is set to come in, we're looking at non-farm payrolls to come in about 108,000. That is not a huge number, given that we were at 140 last month. To now think that we're going to digress and come back to 108. Again, the market is still anticipating that we seem to be in some level of a recession, but I think we're going to come back in. We're going to exceed those expectations. I think the number might be slightly less than it was last month. So we're going to be looking in the 130 to 140 range, maybe 125 to 135, but it's still going to re-emphasize that the labor market appears to be on stable ground, meaning that the Fed doesn't need to do anything aggressive in order to spark a recovering economy. That's not going to be a concern in the labor market. So let's take that off the table, which leads me into point number two of what's the big thing to look for this week. And it's unusual that we have them both in the same week, but we have inflation data coming in, and it is the number one indicator by the Fed. They love this number, and it's PCE, personal consumption expenditure. That is going to be released this week. And look, to me, inflation is the number one Fed's concern, given everything that this federal government is implementing, right? They're implementing, or they have, the big, beautiful bill, which is adding trillions of dollars to our federal deficit, with the anticipation that the government, that the economy will grow. We'll be able to compensate for that, and we'll still be able to bring the federal deficit down. But we've been sold that bag of goods before, which has a lot of traders just hesitating. It has everyone on the fence. And the other thing that we have is, obviously, we have tariffs. Tariffs continue to play out. We got the announcement over the weekend that there's been a deal announced with the EU. We saw Japan announce last week. So as those begin to trickle in, and looking at what they were, or what they were perceived to be as far as a trade deal, and what they are going to be now, will absolutely have a impact of what traders and what the Fed is going to be looking at for future inflation. But make no mistake about it, inflation is the Fed's number one enemy. And to me, it's coming back into being sticky. If you remember that term, we used it a lot last year. It was just sticky. It kept coming around. It kept coming around. And then it seemed to be receding. Every month we seemed to be going back, even by 0.1%. Now, with the tariffs and with everything we have going on, we see it moving in the opposite direction. We see it going up about 0.1% every month. Boom, boom, boom. So to me, it's back to being sticky. And what it does is it paints the picture of the following: the Fed isn't going to do a damn thing, or they shouldn't do a damn thing. Because if you have sticky inflation and we're going to be running at around 2.6, 2.7, maybe 2.8%, we're now inching up closer to the 3% level, a far cry of where the Fed wants to be at the 2% level. And if you have a stable labor market behind that and it's not showing kinks in the armor, there's no real reason for the Fed to do anything. You cannot really make that justification, in my opinion. If you're looking at it from a very macroeconomic standpoint, the Fed should sit tight and not do anything. And I get, once again, to me, the Fed is usually reactionary, right? They painted us in this corner. I've talked about this before, where they've left interest rates too low at the 0% level, which has led to this hyperinflation, which has led to those aggressive increases. Money was so cheap for so long, and that's why we had just crazy inflation upwards of 9% when we didn't have to have that if the Fed reacted sooner. But in this case, where I see inflation starting to get sticky again and starting to tick up, and I see a labor market that keeps coming in above forecast and seems to have some legs, in my opinion, the Fed shouldn't do a damn thing. And that brings me to my third point for this week. Believe it or not, even with all this other data, we do have a Fed policy meeting this week. And it seems to just kind of go by the wayside at this point because there is a 0% chance that the Fed is going to do anything with the Fed funds rate. Given the current economic information, they are not going to move the needle at all. However, as always, it is their vernacular. And when a new statement comes out from a Fed policy meeting, you can bet that all traders are going to be listening in. And the big thing that we really need to look at is, does the Fed become political? There's been so much pressure on, in particular, Fed Chairman Powell to do something from the Trump administration that I wonder if his language starts to become very dovish, and I mean very, even more than it has been recently, in the fact that he's going not only be getting political pressure from the administration, from other Fed members themselves that I believe don't want to be painted with the brush that they move too slowly. But again, if you take those two pieces of information, the clear thing is the Fed shouldn't do anything. They should sit tight, let this thing play itself out. Let's hope that inflation can stabilize instead of ticking up. Don't rock the boat too much. It seems like, the labor market is steady and they shouldn't do anything. But it is going to be something that has the potential to light fireworks in the market. So look, if you're talking how important and how volatile weeks can be, this is one of the biggest ones that we've seen in a while because we have those three things and they are huge to Fed policy and the perception of where the market is going to be headed into the future. All right, y'all, have a great week. Make sure that you're tuned in. If you need any one-on-one to discuss your situation or your client's situation, please do not hesitate to book a call with me. I would love to jump on a phone. You need a pre-approval. You need me to crunch some numbers for you. You want to better understand when might be the potential to make a move. Let's talk. I would love that opportunity. And again, hit that subscribe button so you never miss a beat as I come to you also every day with an episode of the Daily Dose, bringing you a very quick 2 minutes of what happened that day in the marketplace. So you're always in the know. All right, everyone, once again, have a great week, and I'll be coming to you soon.